Bitcoin's appreciating about 50% a year for the past 5 years. We expect it'll appreciate about 30% a year for the next 20 years. And we offer these credit instruments that pay about 10% dividend yield in the form of a return on capital dividends. And so it's a pretty strong business model. If you want to work out the math, as long as Bitcoin goes up 1.25% a year, the company can pay the dividend forever and create more shareholder value. If Bitcoin stops going up 0% forever, we got about 80 years to figure out what we're going to do about that.
MicroStrategy has moved 58,000 Bitcoin to Fidelity, a move signaling a strong shift in their belief of Bitcoin. We're going to jump into this and what Michael Saylor has to say a little bit later on. Jamie Dimon has bent the knee. $4 trillion JP Morgan banking giant just filed to launch a Bitcoin-backed bond, signaling once again that we watch what they do and not what they say. And the cat is out of the bag. It looks like XRP might be nearing a supply shock. Assuming that there's only 5 billion XRP available on exchanges, 79 million XRP absorbed by Franklin Templeton's XRP ETF represents 1.6% of the total supply. If you're investing in XRP, even Bitcoin or MicroStrategy, other altcoins, you don't want to miss this video. Later on, we're going to unpackage what the rest of the economists have to say about this, as well as the challenge America faces with the rapidly disappearing middle class. If you are in one of these households that makes less than $150,000 a year, you need to watch this video. If you are above that threshold and looking for a hedge to protect your family's financial wealth, you need to stick around for the end of this video. But first, give me a comment 777 down below if you're feeling bullish, if you're feeling blessed, and you're still ready to be the first millionaire in your family. Smash that like button, hit subscribe to affirm it, and let's run into the video. Welcome back, Bull Runners. JR, your favorite crypto dad, and we're looking at the bull market peak indicators on CoinGlass.com here, ticking up to 43.49%. While many might not expect that to be a good sign, we were below 40% just recently, signaling that these indicators are moving towards completion, possibly signaling a bull run about to come. And the data is not the only ones saying this. JP Morgan says Bitcoin has become a tradable macro asset and could reach $240,000. Though out of the other side of their mouth, they continue to close bank accounts tied to crypto. First, it was Strike CEO Jack Mallers, and then it was Shapeshift CEO. And let's not forget the FUD attack that they've been running on MicroStrategy. MicroStrategy not fazed by this, saying that they've discovered something better than Bitcoin, which is more Bitcoin. Is the bottom really in for Bitcoin? This is not financial advice, but MicroStrategy has entered the RSI buy zone. And this is the third time in 5 years. Each time marked the bottom for Bitcoin. Oversold levels across Bitcoin and altcoins, combined with liquidity just starting to flow, point to huge potential upside ahead. That liquidity that is starting to flow is the big talk around the markets. We heard Kathy Wood yesterday pointing out that we could start to see a big shift in liquidity as early as the middle of December. Jumping over into Altcoin Pro University for a quick crypto news update here, Coinbase Ventures reveals that 2026 might be worth paying attention to. Their narratives, the context, Coinbase Ventures just dropped the blueprint for where they're looking to invest in 2026. These aren't just cool trends, these are the real money narratives. And if you're early, you might just catch the next wave before the crowd shows up. They're looking at real world perpetuals like Ondo, prediction markets, prop firms, privacy. Guys, the list goes on. And if you want more of that, you can get that at Altcoin Pro University. Again, the link is down below, but don't click it just yet. Stick around a little bit later on. This is where you will get the rest of your crypto news though, market updates, altcoin picks, DeFi yield picks. As I've mentioned before, we're seeing 100% APY, 39% APY, 26% APY. And if you haven't found a way to make your money work for you and make money in these markets, whether they're going up, down, or sideways, you need to stick around for a few more minutes. We're going to get into the charts, but first, back to that elephant in the room. 70% of Americans are now living below the poverty line, according to Mike Green. If you make under $140,000 to $150,000 a year, you're living in poverty the same way we measured this in the 1960s. So where do people put their money? They're looking for hard assets in these economic times of a devaluing dollar. They're looking at real estate. They're looking at gold and silver and Bitcoin. Real estate's always great, except it's hard to liquidate, just like physical gold is hard to liquidate. And the median sale price of homes sold in the United States, according to analyst Melody Wright, is facing a price correction worse than 2008, with home prices potentially dropping 50% to match the median household income. According to Zillow, 53% of all U.S. homes lost value over the past 12 months. This is the most since 2012. While being cash heavy will give many of us the opportunity to buy the dip on real estate, those who have been looking to sell have been running out of time. Let's take a quick look at the markets first, and I will share with you guys a little bit later on a hedge of protection for your family's financial future. Again, none of this is financial advice, simply informational and educational purposes only, but the data is clear. We're currently sitting at $3 trillion total market cap on cryptocurrency. Altcoin season index is at a 24. That's sitting about the same territory we've been, and we're chopping sideways in the altcoin market cap at about $1.26 trillion. Looking at that market overview again, we have a fear and greed index at a 15, still in the extreme fear territory. Extreme fear generally associated with an extreme buying opportunity. Again, don't run out and buy the dip just yet. Let's look at the charts as well, and let's jump into Bitcoin first. Sitting at $87,000, and now we are consolidating. On the daily, the wolf pack is bullish. This is an indicator that signals the 1100 moving average and the 50 moving average crossing over themselves. This is when the 1100 crosses over the 50 in an upward direction, that is, that we have a bullish momentum moving to the upside. Right now, we do see the 50 trending downward. That makes sense because we have been trending downward since October 6th, the high that was predicted. Again, that's based on the 1,064-day cycle, 364-day cycle that Bitcoin has been following every 4 years for the last 12 years. So while we've been running down, the 50 is starting to trend down, but we're still bullish on the wolf pack here. Better than that, more exciting than that, it does look like we are starting to consolidate sideways at the $87,000 level. This is a very strong area of support, as I mentioned in yesterday's video. I'm happy to see us here. Should we break to the downside, we'll be looking at $80,000 to $81,000 again, where we touched off of. Should we break even lower than that? Again, this is the 1100 moving average that I'm looking at here. This is a very popular institutional moving average. If we broke down to this 1100 moving average, we would be retesting the mid-cycle low, which you saw back here in April, right around $72,000 to $73,000. If we don't break to the downside and we start to make our run back up to the upside here, we'll be crossing over our 10, our 30, and our 50 EMA. We'll be breaking through areas of $98,000 to $99,000 before we get back up above 100. We'll take this one day at a time for all you short-term traders. The long-term picture, according to major institutional investors, is that they are bullish on Bitcoin. Moving into Ethereum, sitting at 2,900 and change at the time of this recording, bouncing off of a very strong level of support, right on that 1,100 EMA, which is about 2,700 at the time. It's been running up since then, crossing over the 30 and the 10 EMAs, not quite back up to the 50. This is a big retail measuring stick. A lot of retail is going to flow into Ethereum before they go into anything else. That's where a lot of the sub projects are, the gaming projects, the NFT projects, DeFi yield projects, things like that. You can also see this though on the others, and this is an indicator that is all other cryptocurrencies excluding Bitcoin in the top 10 against Bitcoin. So this is all other cryptocurrencies against Bitcoin, taking out the top 10 big ones, right? And we saw a nice little run up breaking out of a small symmetrical triangle here that goes back into early November right up until about the 11th when it broke up. Broke to the upside there. It looks like we're forming a small W pattern here. If we do continue to break to the upside on here, we're going to get somewhere in this zone right up here, which is going to take us right back up to the downward trending resistance that we have failed to break above for a long time, all the way back to early 2022. But this is the signal that retail is starting to come back. The bigger W pattern I'm looking at is right here, and that's what we want to see. We want to see us get back above this 1100 moving average right here. That would signal that retail is definitely back in full force. It's probably going to take a little bit of injection of liquidity. It's probably going to take some stimmy money, something like that. We'll see how that plays out. What is going to bring retail back? Who remembers 2021 crypto bull run? Thanksgiving was fantastic. Everybody was, pumping their Shiba Inu and their Dogecoin bags and having a great time. And then all of a sudden by Christmas, it was a completely different picture and nobody even wanted to show up for the holidays. It's looking like the opposite this year. It's looking like Thanksgiving is oh, hey, how are your little Bitcoins doing? And now we're seeing the possibility for Christmas to be a completely different picture, showing up and saying, I told you so. Well, that would be a great time. We don't want to brag about things, right? You got to be in crypto for the right reasons. If you're not for the right reasons, you'll experience the wrong things. But moving along, let's jump into XRP. Possibly experiencing supply shock with these ETFs launching, and there are so many more to come. We've got new ones listing as early as the 29th, and we're already starting to see the inflows from this. XRP has held up much better compared to the overall assets like Bitcoin since the October 6th, October 10th drops that we started to experience, and that's just because so much is just being held off exchanges. Bouncing from the last dip right around that $1.80 to $1.90 range that we saw, we have been running up very nicely and steadily since. If we continue this uptrend, it is possible that we could close out a bullish weekly candle. That would be a signaler that we're moving back above the 50 EMA there and possibly indicating bullish momentum. And then we're going to have to start breaking through areas of resistance right around $2.61 to $2.74. That green bar is the one that I'm looking at right there, the one that we need to get above before we can start taking profits again. And then what do you do with those profits? Or are you happy with sitting on a bag for 4 years or 8 years and waiting for it to go to the moon? This is where many people have been coming to us and asking about the education that they've already gotten with Altcoin Pro University or are looking to get into, especially around technical analysis essentials, because many people are looking to learn how to day trade, how to diversify their work and stop trading hours for dollars and instead making their money work for them. And if this is an interest to you, we've got one more question for you.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test, and you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund, and one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with 6 figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
Guys, remember that code 777. Let's see where XRP and where Bitcoin and the rest of crypto is going to go. And I will see you in the next video. Thanks for watching.